Hello traders, and welcome to another great video about the markets and how to spot false breakouts and how you can make them profitable for yourselves. My name is Yaroslav Birchenko. I am a market analyst at olymptrade.com, and today we are going to give you a lot of really good information that will help you avoid false breakouts altogether or monetize them and try to capture the move and try to understand false breakouts so that you can then use it to your own benefit. Now, here's a good example on your screen of a good breakout. This is a graph of gold, and we are breaking out of a trend line, a downward trend line. And as you guys can see, here is that candle that signifies that we are now breaking out. And as you can see, when price comes back, it retouches this level as a level of support now. If previously it was a level of resistance, then we broke out and now it's support. So this is a good breakout. Let's talk about a false breakout and what it looks like and how you should treat it. Now, most novice day traders have a major pet peeve, and they are exactly that: false breakouts. A stock, forex, or commodities trade looks set to move in one direction following a breakout, and then they just jump in. Right? We have a move and people just blindly jump in. End price, of course, quickly turns around and stops them out before they can even exit the position. And it's frustrating and it's costly and it sucks, but it doesn't have to be. Switch your mind frame from the victim, where the big traders and banks are manipulating price, and turn into an optimist. False breakouts provide one of the best low risk and high probabilities around on these markets. So here's what to do, and I will give you a strategy for capitalizing on the market. Let's get started. So first, I want to talk about your psychology and false breakouts. When you start trading, one of the first strategies you often learn or feel compelled to trade is a breakout strategy. Whether it's a breakout from a range or from another chart pattern such as a triangle, flag, or even a small price consolidation, the idea behind a breakout strategy is to capture a big move following a pattern that is easy to spot. So, a false breakout is essentially a contrarian move. It's an opposite move in the market that flushes out those traders who may have entered a position on emotion rather than logic or thinking ahead. So let me show you a picture of a false breakout. We have some good breakouts in the market over these holidays, but let me show you what a false breakout looks like. So here we have a few options. So we have a resistance level that was drawn out previously, and price tries to break it once, fails, tries to break it again, fails, and then we have a reversal signal in the form of a bearish engulfing candle. Same thing here, long wick, something of a hammer pattern, and it happens around key levels of support and resistance. Sometimes you need to give these price movements some time. So patience is one of those virtues. Basically, what I'm trying to say is a false breakout happens because amateur traders or those people who have weak hands in the market will tend to enter the market only when it feels safe to do so. This means they want to enter the market when there is already a quite extended move in one direction and it's about ready to retrace. They predict that a breakout is going to happen from key support or resistance level too early. Professional traders watch for these missteps by the amateurs, and at the end result is a very good entry from them with a very tight stop loss and huge risk to reward potential. So it takes discipline, you guys, and a little bit of gut feel, some intuition to know when a false breakout is likely to occur, and you can never really know for sure until one has already formed, right? The important thing is to know that, they look forward to what they look like, and you should already have a plan on how to trade them. And this is what I'm going to teach you guys next. So, how do you trade false breakout patterns? Well, false breaks occur in all market conditions. we have trending markets, consolidating markets, counter trends. Perhaps the best way that we can learn how to trade them is, have a dominant daily chart trend, like we see with the euro. It's a very dominant daily trend that we have. And anytime that we would break below this level, somewhere around here, or maybe even here, that would be a strong signal that we should buy. Let me show you guys another picture. So here we have the Japanese yen, or excuse me, British pound Japanese yen currency pair, and there's a clear downtrend in place, and there's multiple false breakouts that we can see within that trend. And you can see that the false breakout is going against an already dominant trend. And usually it's a very good signal that the trend is likely to resume. So whenever we have that initial desire to go higher, but then it's rejected, that's usually a great entry point to enter in the opposite direction, you guys. Amateurs traders, they love to pick the top or the bottom of a downtrend, or the top in an uptrend, and this is a terrible strategy. It can cause false breakouts against the trend, like we see in this picture here. Each of these false breakouts that you guys see on this chart, it's very likely that amateur traders thought that the downtrend was over, and so they started buying. And once this buying started, the professionals came back in and took advantage of the temporary strength within the downtrend market and entered short positions from very valuable positions. This is why we have long wick candles, is because when price reaches these very high levels, professional traders, they see this as a discount, as a very good discount, like you'd see in the store where there's a sale. Imagine that this is a sale. And so that's why finding these counter trend false breakouts is actually a really good trading opportunity. And that's why I recorded this video for you guys, is to show you the opportunity that sometimes beginner traders miss. All right. So the chart shows examples of false breakouts within a continuing downtrending market. And I want to show you guys that every time there is this false breakout, it's usually, it leads to the resumption of the main trend. The best way to make sure that you don't get caught in a false breakout from a trading range, and I'll show you a trading range next, is to wait for price to close outside of the range for a few days. Now these have been daily graphs, as the higher your time frame, the more reliable the trading signal you have. More experienced traders, they can also avoid false breakouts that don't contain a price trigger point like a pin bar. And let me show you how. So here we have an example of trading within a range. The false breakout pin bar that I showed you guys in the last picture, this is a strong sign, but sometimes the market does something like this. It's a little strange, it's a little weird. And like I said, the two false breaks of the support in the chart here, they're both potential buy signals for very savvy investors, for savvy traders. And sometimes you need to wait a few days. 1 to 2 days is my recommendation to understand really if it's a good signal or if it's not. Like the example that I showed you guys with gold, we waited a few days before buying into gold, having the understanding that this is actually a legitimate breakout. It's legitimately breaking out. False breakout patterns can sometimes signal even the beginning of a new trend and the end of the current one. Let me show you guys another example of what I'm talking about. So here we have the pound dollar, and this is a standard double top. When you guys see this kind of market pattern, this is a double top, and we have one attempt at a breakout. It failed. Another attempt where we solidified the resistance level, and then we had the pin bar false breakout. And after that, that's when everything changed. The whole uptrend came tumbling down. The reason I'm showing you guys this graph is we have a lot of assets that are heavily trending, like the Aussie dollar, Australian dollar, US dollar. Also, we have Bitcoin, heavily uh, trending market. We have gold, which has now solidified in a reversal uptrend. Also, we have the S&P 500, which is, puffing on fumes, but still climbing up higher. So these are now little hints that you guys have of things to watch out for. Now we can see that the resistance level held right here on 2 occasions, but then on the third one, price created a very large false break pin bar, and that signaled that a potential down move was coming. And not only did the false breakout signal a down move, but it started an entire downtrend. So let me give you some tips. This is important, guys. Write this down. False breakouts occur in trending markets. They occur in range-bound markets and sometimes go against the trend. Watch for them in all of these market conditions because they often give you strong clues as to the coming market direction. Now, trading counter trend is difficult, and I don't recommend it. But one of the best ways to trade against a trend is to wait for a clear false breakout signal against a trend, like we see here, from a support or resistance level, and enter from there. False breakouts give us a window into the struggle between amateur and professional traders, and they give us a way to trade with the professionals, which is what we should all try to do, is move with the smart money. So you should learn to identify, trade, and trade false breakout patterns, and trading will totally be different for you when you master this. So how do we make false breakouts work for you? Let me start giving you guys tips on how to trade false breakouts. Now, trading breakouts does work, right? When we do have that trend, we do have a trading opportunity. But there are many more false breakouts in the market. And if the false breakouts are constantly frustrating you and you are losing money, then the market is actually telling you something. Why not trade the false breakout instead of trading the breakout? So if you are constantly losing money because of this, maybe you can make some money trading alongside the traders who are actually trading the breakouts. And as you guys can see, a lot of times it happens when we come up to some sort of level, and there's always that desire for price to test something out, to try and test some new levels. One thing that is very important, and let me teach you guys this strategy. It's going to require practice, focus, and quick reflexes, but it'll definitely make you guys some money. Not all false breakouts are the same. False breakouts occur regularly and on all time frames, not only on the daily. We have it on the hourly graph, we have it on the 10-minute chart. And false breakouts, the best way to trade them are in the direction of the main trend. Actually, let me draw you guys a picture to illustrate what I'm talking about. So imagine that we are moving up, and then the market draws something like this, like a triangle. I'm sure you guys have seen this all before. We would outline the triangle as such, right? Unilateral triangle. And then price does one of these, right? We have a breakout down here. Now, this is actually a good trade to take. This is a good false breakout. Actually, it could be anything, but historically, whenever we have a rising trend line like this, it's very likely that the trend will continue in this direction. So when we do have, some sort of attempt to break lower, but we don't get below this level, this is actually a really really good trade to take from right here into the direction of the main trend. That's because the trend dictates that the price is likely to continue moving higher. And a false breakout to the downside adds evidence to that conclusion. If it can't go higher, or sorry, if it can't go lower, right? If we don't break this level, then it will try to go higher. All right? I hope that makes sense, you guys. This is how I talk to myself during the trade. All right? So we have an uptrend here. This is an obvious uptrend with several fake breakouts here to the bottom. I tell myself the trend is up, but we are in a potential range, or possible double top or possible triple top coming, or head and shoulders pattern, whatever. If the price continues to decline below the previous swing low, so somewhere around here, if price continues to drop, then we won't go long. I won't buy. But if price pauses at this level or moves only a little bit below the level and then rallies back up like we have in this candle, then I want to buy quickly. I want to set a stop loss right below this new low, wherever it may be. And I want to monitor the conditions for when to exit a profitable trade. When we renew these highs, when we have a new high, and then the first candle down afterwards, I'm out. All right? If the price is moving sharply higher, I will sit and see if it breaks out above the prior high. If it pauses around this level here for a day or two, I will exit immediately. The strategy is very simple, but it does take practice and you need to focus to implement it. False breakouts occur very fast. They're very, very quick, and they try to draw people in. They draw in a lot of traders who are who are looking to jump on the action that has already passed. Don't do this. Be patient. Make sure that you play out a strategy in your mind. Write down these key things. This is important, guys. Write this down. What is the direction of the trend? That is the only direction you should be trading in. What would create a false breakout, in the opposite direction of the trend? If that scenario occurs, how and where will you get in? Will you use a limit order or a market order? How far does the price have to move back into the pattern for you to take your profit? Another thing that is very key that you guys should think about before you enter the trade is, where will you put your stop loss? And where will you get out when you have a profitable trade? When you answer all of these questions in your mind, then you have a potentially good setup for your trade. That way, if the trade does not occur, or if the price action does not give you the setup that you were looking for, then you don't have to take it. You are composed, and you know exactly what to do if the trade does develop. So let's summarize everything that we've talked about today. How far the price moves back into the trading pattern is how far does it need to go for it to be considered a false breakout. That all depends on the market that's being traded and on the context of the market volatility. On a very volatile day, the amount that the price needs to move back into the pattern will be larger than on the day when the volatility is very low. And also the market that you're trading, the S&P 500, is going to be a very different market from the Bitcoin market. The volatility in both of these are completely different. Also, assess the quickness and the depth of the breakout. If price breaks a long way out of the pattern, like about a quarter of the pattern size, and then moves back into the pattern slightly, Don't trade the false breakout strategy. Trade the breakout strategy. Like I showed you guys in gold, it's an actual breakout. A false breakout should be relatively small, should be relatively, relatively quick. Um, and short-lived. Again, it should never be more than 1 to 2 days. If price stays for the third, the fourth day, that may be a signal that we're going to continue once the consolidation is over. And the risk that you should take, the amount of the risk amount that you should take when you're trading the false breakout strategy should be very small as well. Keep in mind that the move that will happen during a false breakout will be small. So if you're taking the opposite direction of a false breakout or a fade, then you need to hold the trade until the momentum wanes. Now this may be near the opposite side of the pattern, like if we have a consolidation like we see here, or it may be until we have a breakout in the trending direction, right? In the direction of the main trend. Exit if the false breakout occurs in the opposite direction of your trade. That would be the number one advice that I have. So imagine we are in a consolidation here. You entered on the premise that this is a false breakout of the 200 EMA, right up here, false breakout of this level, and you want to exit as soon as we have a breakout of this level here. Does that make sense? You have captured the entire move of the false breakout. It's better to have the money in your pocket than to sit through a correction. So I hope that makes sense to you guys. This strategy works well because you are only trading false breakouts which align with the dominant trend. So this is the dominant trend. This was the consolidation. You can still trade normal breakouts in the direction of the trend, which are, more likely to work out anyway. But this information definitely has made me a lot of money over the past several years, and I hope that it helps you as well. Thank you guys so much for your time. I hope that this information will come in handy in the coming trading period ahead. And I also hope that you have enjoyed the way that we have compiled the video for you. And please go ahead and leave a like if a trade works out for you when you recognize a false breakout. And leave a question in the comment section below so that we can have some communication back and forth so that I can help you guys understand if something was not clear. Happy holidays, everybody. Happy 2021. I wish you guys success in the new year. Thank you for watching this video and see you guys next time.